In today's video, I want to introduce a free and advanced indicator on TradingView that gives the most accurate buy-sell signals ever. To add this amazing indicator to our chart, here we click on indicators and we search Boom Hunter. We add this one, Boom Hunter Pro, which is written by someone named Verified. Alright, this is the indicator, and as you can see, it's added here below the chart in the form of an oscillator, including many lines, shapes, and labels. It may seem a little confusing, but don't worry, I'll explain the key components and how you can use them for trading. This indicator is built based on center of gravity oscillator, this white and blue line, which is a fast oscillator for evaluating momentum. When the blue line is above the white line, we have greater upside momentum, and when the blue line is below the white line, we have greater downside momentum. This cloud is the smoother version of this, and it can help us when we are entering a position for more confirmation, which I'll explain later. Let me, in the settings here in the style tab, remove the values in status line here by unchecking this, so we can better see this yellow line. This yellow line is resistance line, and this blue line is support line. Not a support and resistance for the price, but support and resistance here for this indicator, and it has its use case here in this indicator for entering a long or short position, which I'll explain later. As you can see, we have some consecutive points near COG line, and they show possible pivot points in the market. When they are green, they show a possible bullish pivot point in the market, and as you can see, after them we have turning in the market into an upside move. And when they are red, like here, they show a bearish pivot in the market. For example, here you can see that the market turned down. In some cases, they are a sign for a bigger movement of the market, and in other cases they just show a pullback or pause in the market. Later I'll explain how you can use these pivot point signals for confirming trades. And we have also red dots like these, and as the labels are saying, they show overbought. Orange dot is a weaker signal for overbought, and just like any other indicators, overbought oversold reading, they are not necessarily a sign of reversal, and they can be just a pullback or small pause in the direction of the trend. We have also a continuation signal, which I'll explain later how you can use it. Alright, now let's see how we can use these long and short position signals for entering a trade. Having a long position in green color is the strongest signal, and having it in other colors are the weaker signals. In this video, we focus only on the strong signals when the long position signal is in green color, but depending on the trading strategy, for example, if you have a strong buy signal here based on your trading strategy, you may also use them. Alright, the first condition that we must have is that before the signal, this yellow line should be sloped down and placing on the blue line. Then for more confirmation, we must have these green points that show a possible pivot point. And here in SOG oscillator, having the blue line above the white line shows greater upside momentum, so more confirms the signal, and also having them above the cloud more confirms that the price is gonna advance. So based on this signal, we can open a long position here as this new candle is opened. The stop loss for this trade is placed below the previous swing low, and as you can see, we had advancing of the price up to this point, so this trade was a profitable trade. As you can see, in the ideal situation, we should have our signal before having the yellow line back on its position, but we can show flexibility on this as long as we have other confirmations. Here we have a continuation signal, which is giving us the signal that the prior trend is going to continue. For confirming it, we look at the last signal and also the price action after that. The last signal was long position signal, and it was a correct signal, and when we look at the price action, the price was truly advancing. So based on this continuation signal, we can enter a long position at this point where this new candle was opened, and you can see how the price advanced after that. Alright, moving on the chart, we have weak signals for opening long position, and we don't even have the first condition, which is the yellow line should be sloped down and placed on the blue line. Alright, let me move back on the chart to show you an example for opening a short position. When we have a short position signal, the first condition is that before the signal, the blue line should be sloped up and placed on the yellow line. Having red dots like these, which show potential pivot points, more confirms this short position signal. Here in COG oscillator, having the blue line below the white line shows greater downside momentum in the market, and having them below the cloud more confirms the declining of the price. In this case, you can see that we had an initial signal for overbought here, and then we had overbought signal here, which more confirms that the prior advancing of the price is done and the price is going to decline. So in practice, based on the short position signal that we had, we could enter a short position here at this point where this new candle was opened, and you can see how the price declined after that down to this point, which made this trade a very profitable trade. During this downtrend we didn't have any continuation signal, but here we had weak long position signals, but they were just for this pullback. This is a very powerful indicator that can perfectly help you to know when to enter a long or short position because it provides different information. So with more confirmation you have increased probability of achieving the expected result, but this doesn't mean that it generates 100% guaranteed signals. No indicator or strategy is able to do this, and losing trades are always part of the game, and you need to manage your risk by placing stop loss based on a proper risk management strategy. There is a risk management strategy that is called 1% rule, and it's a perfect choice for active trading. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it because risk management is one of the key factors for you to become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new video. See you guys in next video, and good luck with your trading.